Silver has broken out of a downtrend that has been in place since the end of January when we had the short squeeze silver weekend. And gold has broken out of a downtrend that has been in place since the beginning of the year. Now, for everything on a technical analysis basis, we catch up with Chris Vermeulen of thetechnicaltraders.com. And if you want to see more interviews like this with thought leaders in financial markets and industry experts, subscribe to Goldcore TV and hit the notification bell now. Chris, welcome back to Goldcore TV.
Hey, thanks for having me back here, David.
Listen, maybe we start out talking about silver because it's broken a downtrend line that's been in place ever since the end of January, beginning of February, that short squeeze silver weekend. And I know there's a lot of people that are very interested to hear your views on whether you think that it's a significant break. We seem to have been kind of caught below the 50-day moving average, still wondering whether it's something that we have to break through in order to kind of confirm a move to the upsides. What's your take on silver?
For sure. Well, I look at the 50-day and the 200-day moving averages, pretty key indicators. Silver right now, it's flirting kind of above and below the 50-day, depending if you're looking at the simple moving average or the exponential. But you're right. I like pretty much everything I get into to be above the 50-day moving average. It just means the odds are in your favor. Statistics show that if price is above it, it's more likely to stay above it. And that means it's in an uptrend. So silver's also above the 200-day. It tested it about a month ago, and now it's back above it. So silver to me looks really, really good considering you look at gold and gold miners, which have been trading lower for the last 8 months. Silver's just been shut sideways. So it's definitely kind of leading that sector, holding up the best.
And it seems to very much consolidated above the 2250 level there now. Have you a chart there you can pull up for us and just talk us through it?
Sure. Yeah, let's pull that up here. Okay, so when we take a look at the chart of silver here, you can see this is the daily chart, and it goes back to early or late 2018. Overall, if we were to just zoom into the price action here, we've got the green line here is the 200-day moving average. We want a price to be above that, and we also have the blue line, which is the 50-day moving average, and price is kind of flirting with that level. And this is a really critical point. I mean, we've seen silver have this strong run. If we see this, just draw on the chart, we got this strong rally up, and now it's consolidating in this sideways pattern. It's just been oscillating around, really driving a lot of people nuts. They want to see this go higher, and we keep poking to these highs and it sells back down. So overall, there's still some more work to be done. When we zoom in on the shorter term time frame, you can see it's pretty clear we're still making a series of lower highs. We're making a series of lower lows. So it's still channeling down. Silver is flirting with this previous high right here, which is resistance. And so we want it to stay above the blue 50-day moving average. We really want to get it above 26.75, somewhere in here, whatever this high is right here. We want to see it hold up there for at least a week. And that to me is going to be a kind of a critical first shift, because at that point, once we break it, we're now making a higher high. And so that's halfway through the trend reversal. We also want to see higher lows. And usually once we break that level, we'll probably see a strong pop, and then it'll pull back and consolidate in a bigger way, something more than a 2-day pullback here. And we'll be able to say, okay, well, now we've got a higher low. So that's what I'm looking for in terms of short-term price action for silver.
Awesome. And then if we have a look at gold, actually, quickly, that downtrend has been in since the beginning of the year, actually. And it looks like it's making a stronger move possibly than silver, breaking that downtrend. Would you agree with that?
Yeah, I mean, it's flirting with that 50-day moving average. Now, there's a little bit of problem with gold. I mean, gold chart long-term looks amazing. It looks and feels like it's trying to put in a bottom here. But, the 200-day moving average is starting to turn red, which means it's turning down. It prices below the 200-day. The 50 days also below the 200-day. All these things are telling us kind of the long-term trend for gold is in this big consolidation. So overall, I like gold. I think it's putting in a bottom, but it really needs to get back above the 200-day. And at that point, it will be above the 50-day as well. So there's a lot of work to be done. There's another $80, $90 to the upside to get above that 200-day moving average, at which point probably a series of higher highs and higher lows on that daily chart, which is putting us in a new short-term uptrend, and we'll kick back into that high gear. I mean, the real breaking point for gold to me is actually going to be right about here, this 1966. It's a long ways up, but that's the real, I think, breakout where gold is going to grab traction and could start the next major leg up where it goes to like 2,700. So there's a lot of resistance. You can see that line on the sand right across my cursor here. 1966, each time there, it got absolutely crushed, sold into. It's also right through the middle of this kind of consolidation. So there's lots of volume through there. So that's going to be a real critical line in the sand when we get up there. It might take a few weeks or a few months to eat through that. But once it can stay above there, then gold to me is going to be off to the races. And a good way to get a feeling for the strength of gold is to see what the gold miners are doing, which they're starting to outperform the price of gold. And they're also starting to outperform the SP 500. And this is what we typically see. We usually see kind of gold miners come into play and actually become a leading sector before gold actually really starts to take off. And it usually happens just as the stock market is kind of going into a last push higher before it goes into a multi-month pullback. So all of the things are starting to align. We're going to see, I think, rotation here in the market. And I think precious metals and miners are on the verge here of another big run to the upside.
Maybe just for a moment, you might talk about the death cross that we saw in gold, and then the opposite, the golden cross, and how significant that they were. The golden cross we saw way back when, but how significant that they can be as indicators.
Yeah, so the golden cross is when the 50-day, well, this is the death cross. When the 50-day crosses below the 50-day or the 200-day, sorry, it becomes the death cross. It usually means, okay, the more or less the big uptrend in gold is over for now and it's underperforming. So gold is kind of in a recovery stage. It's above the 50-day, but the 50 days below the 200-day. It's just a point in the market where you're better to just ignore it, let it do its thing. Eventually, it's going to trade its way sideways. The 50-day moving average will start to, curve up. Price will be above it. The 200-day will eventually kind of fizzle out. And eventually we'll get back above both of those, the 50. And this is where you'd be more excited to get in is somewhere when it's above it over here. So there's a lot of work to be done. These are long, slow moving averages. And you really want to be cautious when price is below the 200-day. It has a downward bias and people are still selling. So I think we have to let this mature, let the time just kind of carry this pattern out. And eventually when we get back above this 1860 area, above this, where this 200-day is, that's when things start to get exciting. And eventually we're going to see this golden cross, which is when the 50-day crosses back up above the 200. And so many people follow that. I'm not a huge fan of these long moving averages, but just because they're lagging like a year, the 200 days is way behind.
Yeah.
But so many people follow them. When you get a golden cross, people it hits headline news, all kinds of technicians write about it. And of course it spurs on the market for people to jump in. And that's, I suppose
if you scroll over there to the left, you'll see the last golden cross and how significant that was way back.
Yep.
Way back then.
Yeah. So when we go back, we can kind of zoom into the more recent price action. But yeah, we had a golden cross here. It crossed, and then more or less it had a nice push up and then consolidated, and it just kept going up. Sometimes you get some of this chop. The death cross, it sold off in a huge way. Had a little bit of a golden cross. It was still really choppy. And the whole reason why the market is choppy like this is a pretty tough market to trade when it's like this. And that's because the data here doesn't go back that far, but more or less gold was trading in a sideways pattern here. This was the breakout level right across here. And it went back, a couple more years still. And gold is trading in this, it's called a stage 1 basing formation down in this area until it breaks this top of this blue line. You really don't want to mess with it because it's just really noisy. You get these rallies and sell-offs. And it's very tough. You get a lot of mixed signals with the moving averages. And, you look, once it breaks out and starts a new run, you can see how you get these very explosive moves. So right now, you could argue this market is actually in kind of like a stage one accumulation stage. Picture it this way. There's the high range, there's the low range. Whichever way gold breaks out of here, it's going to have a pretty significant move. But in this box, you're really taking almost a 50-50 bet of which way it's going to go. And that's usually not what I'm looking for in terms of a trade. I'd rather let it break here and confirm a downtrend, play a big move down, or let it break to the upside and we catch that next rally to the upside.
One thing I'd love to get your opinion on. We've had a lot of talk, a lot of people interested over the last couple of weeks of moving out of Bitcoin and particularly into silver. And that seems to have been a very good move, particularly given what's happened over the last 72 hours or so. What's your take on what's happened from a technical point of view? Now, I know Bitcoin is very difficult from a technical point of view because it's only gone kind of one direction for the last, particularly since the middle of December. What's your take on what's going on in Bitcoin at the moment?
Yeah, well, Bitcoin, this is a typical pullback. I've talked about this many times. It's in a full-on bull market. Everyone's piling in. If you look at it from like a weekly standpoint, I mean, you can tell it's kind of like a bubble type move. I mean, it's gone absolutely ballistic. And when you just look at this chart right now, these last like 10 bars, where it has huge moves up and down and up and down, that's the sign that it's getting exhausted. It's got tons of volatility. This thing could blow up and drop all the way down to 35,000 very quickly. It can also surge and go to 100,000 very quickly. This is a very dangerous chart. The trend is up. And this type of pullback that we're seeing really it's just part of the norm. If I go back to the daily here real quick, you can see, let's let this load. It's in an uptrend. It's making higher highs, higher lows. It's channeling its way up here in the last little bit in this kind of channel. It's more or less down to a support trend line. If you were to connect these lows, it's down at a support trend line. It's at a previous low. It's right kind of through the heart of these levels here. So I wouldn't be surprised to see if it bounces and rallies. I still have about a $72,000, $74,000 upside move on Bitcoin.
Okay.
But just know it's going to fall 15 to 20% religiously through this process. Some of the strongest pullbacks in trading or in a commodity or an asset are typically in a bull market. For example, Bitcoin here pulled back 20+%. Over here, it pulled back 30%. Over here, we pulled back 17, and right where we are this week, we're down 15 at this point. So these are all normal type of pullbacks in this market. So you got to still be bullish. I wouldn't try picking a top in Bitcoin because the trend is up.
Yeah.
If anything, it's back at a support level here. So if anything, it should find support and bounce. It might go a little lower still, but you got to hold that March low, the recent March low down,
So if you've got the stomachs for moves like that, there's still potential left in it.
Either you need the stomach for it or you trade really small position sizes. It's kind of like, this is more like lotto ticket, 50-50 bet. You're hoping which way it's going to go almost, right? So small amounts of money, you can get in there, have fun, play it. But other than that, it's not something I'd be dumping a lot of money in. I don't want to wake up down 15%, the next day.
And then I suppose if we pick something like the Dow or the S&P, just give us an overall view of what you think in terms of stocks.
Sure. Stocks continue to be in an uptrend. I think they're getting a little frothy here. The type of market condition we're in, this is the SP 500 daily chart. The type of condition we are in, like right here, right now, to me feels like we are somewhere in this kind of phase right here, somewhere in this type of phase right here. I think we're getting a little overextended to the upside, and it's had a really nice run. Right now, I'm starting to see a lot of the defensive sectors start to perform really well. So gold's starting to perform well. Gold miners are performing well. Utility sector and bonds are starting to come back to life. And every time we've seen those move together, it's been when the stock market is in one of these phases where it has these never-ending little grinds higher and just keeps pushing up and up and up without a pullback. And so that is the type of scenario we're in. I think the stock market could have a 3 to 6% correction and pull back and trade sideways for a little while. before potentially going higher still. So that's where, you know, we are in terms of that cycle.
Excellent. And tell us, Chris, if people want to learn more about what it is that you do, what's your website for them?
Sure. So every morning I do a video like this. I walk through the charts. We look at all the key sectors and indexes and commodities, and I just show what's happened in the last couple of days, what should happen today, how it's going to affect any of our open positions, and more or less anytime I take a trade, I share it with subscribers. And you kind of learn every morning while we kind of navigate these markets with my my Trade Alert newsletter, where I focus on ETFs, and every week I teach my strategy on how to trade the best sector ETFs for free on a webinar. So they can go to the homepage and opt into the webinar and learn it in 60 minutes and have the whole instructions, video guide, checklist. So you know, you can do it on your own if you want to as well.
Thanks for watching. And if you enjoyed this video, Chris will be back with us with regular updates from a technical analysis point of view. And if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to Goldcore TV and hit the notification bell now.